Well, we are very, very excited because they're now in the process of building the book. And this is a very traditional process of how this deal gets done, and it's a big deal. Let's walk through it with the woman in charge, Stacey Cunningham, the president of the New York Stock Exchange. Big day for you, Stacey.
It's an exciting day for Uber and all their investors and all their customers and drivers. It's an exciting day for a lot of people.
Everybody here in Post 5 here, Citadel Securities, agrees on one thing. The most important thing is that the deal is getting done. Been a very volatile market week. This was a huge offer, $8 billion, a lot more than a normal IPO. Any sense of when this might open?
I mean, it's one of the 10 largest IPOs of all time. So that's a really big deal. We're not going to rush it. We're going to take our time. We're going to look for the right price, and we're going to make sure that it trades in a fair and orderly way.
You have to be happy by what you're seeing. There was a little consternation a couple months ago. The market wasn't open for the government shutdown was closed. We had 200 IPOs lined up for the year, and a little concern. Is it going to open, and is the market going to handle all of it? And so far, it has. We've had, 13 IPOs this week. It's the busiest week in 3 years. Most of them are trading to the upside. Lyft has been an exception. What's your sense of how the IPO market has been opening up this year?
Yeah, I think despite the government shutdown, a lot of those IPOs were just queued up and ready to go. So we're seeing a really busy second quarter as they're finally coming out to the market. And investor demand has remained strong throughout them. As you said, they've performed very, very well. And despite a little bit of market volatility, you got to keep in mind, if you take a step back, these companies are much bigger today than some of the traditional IPOs 10, 20 years ago. So a little bit of market volatility, they seem to be able to weather a little bit too.
And of course, we've got a lot coming up. We're waiting for Slack to start its roadshow. WeWorks, we don't know when the filing is going to be made public for that, but there's a lot sitting out there. How do you feel about the market's ability to absorb all of this additional supply?
I think what we've seen is that investor demand is strong, right? Uber's just raised $8 billion in a market where there have been a number of IPOs already, so there still is a lot of demand out there. You mentioned some companies. We've seen great dynamic companies come out to market recently, and there are a lot in the wings waiting to come too.
We were talking about the market volatility, a little nervousness here yesterday, $8 billion offering, and we had no idea when we went home whether the market might be up 500 or down 500 on the Dow, given all of the trade volatility headlines. How does market volatility impact the way a stock may open or even price? Can you give us a sense about that?
Yeah, I think if anyone could choose their perfect market, they would want it to be an upward moving market. But if you think about what these companies are doing, they're here for the long haul. It's not just about today. It's about the weeks, years, decades to come. So a little bit of volatility out of the gate is something that I think we shouldn't lose sight on the fact that this is a long-term play.
Of course, we want to know when it might be opening. We're all taking bets. I think the all-time record was Spotify. Spotify, I think, did not open until 12:40. We were all having lunch.
I think some people were eating lunch.
Okay, so could it be that long?
You know, I'm never going to guess at what time things are going to open. And what I can tell you is that we're going to wait till the right time.
So here we are. They're building the book right behind us, behind Stacey. Peter Giacchi is right over there. He's the lead designated market maker. And Stacey, just walk us through very quickly what's going on right now.
So what we're going to do is we're going to look to find an equilibrium between supply and demand. Where does buy interest match up with sell interest? And then also, and importantly, where's their interest above and below that price? So that when it first starts trading, it's not moving around really rapidly, because that first tone is setting a tone with investor confidence. So you have investor confidence. We want to give stability at the right price when we open. So we'll take our time if that's what it takes.
And I want to emphasize how big this is. $8 billion, probably 500 institutional investors that the syndicate, the organization put together to market this, is dealing with. This is a lot of money on the street and a lot of allocation. And in order to start trading, they have to agree that all of the shares have been distributed and dissolve the syndicate, essentially. That's what's going on right now.
Yeah, it's a well-orchestrated event between the designated market maker, Peter, who you mentioned, also the bankers upstairs, the floor broker community on the floor who's sending messages back and forth to their customers about what the interest level looks like. And it all comes together and culminates in that final moment where they'll say the book is frozen and we'll open the stock.
I think I'm still taking 11:30 to 12:30 would still be my guess overall. Where do you?
Fight you on that, Bob.
You have had a long-standing, of course, rivalry, a friendly rivalry with the Nasdaq about this. You're still back and forth on the listings. How do you feel about your share of wins this year versus the Nasdaq?
If you look back over the past 5 years, 75% of tech proceeds have been raised on the New York Stock Exchange. So I feel pretty good about it.
You should feel pretty good about it. Of course, this is going to be an exciting day for everybody. And again, it's like everybody here agrees. Just the fact that the deal is getting done itself is the most important thing. Stacey, thank you for joining us as always.